Hello, Drew here with goldbugtraining.com, and I'm doing a special video today, and that's about regarding spot storage programs and the difference between kind of the future side and the spot cash side. And we're going to go over the vaults, the CME or the Comex vaults, and what to look for and how to identify if you're being resold futures metal, basically, at a higher carrying cost. And so let's go ahead and take a look real quick at the vaults that the CME or Comex uses. And as you can see at the very top there, we've got Brinks, then we've got Delaware Depository, then we've got HSBC, and then we've got International Depository Services, or IDS, JP Morgan, Maka Amit, Manfred Tordella, and Scotia Makata. And what you're looking at here is very transparent versus the spot. Is you can actually see how much of their metal is registered and eligible. Now, your spot dealer probably would never disclose to you because they don't have to, because they're not registered with the CFTC or NFA, but they wouldn't disclose to you how much metal they're holding. Yet Comex or the CME does tell you exactly how much metal is in the system, and it's always audited. I think this comes out every month or so to report the activity. So that is the CME Comex vaults. And why is this important? Well, generally speaking, in the spot market, if you see those names, the Brinks, IDS, and you will see it in their contracts at the largest bullion dealers in the country, or the spot guys. Generally speaking, they're just reselling, or they're going into the futures markets, taking delivery of the metal, and then turning around and reselling that metal to you guys, the general public, on a spot transaction basis. Now, what does that mean? Is you're paying higher carrying costs, and you're paying wider spreads. It's not as efficient or cost effective of just a traditional futures contract. It's kind of a wealth transfer mechanism. Okay. Now, in saying that, one of the reasons why I started Gold Bug Training recently was just in the last few months, the CFTC just filed a fraud case against the largest bullion dealer in the country, located in California. And in saying that, if you were paying attention in their contract, and they actually send you this little slip that said, IDS, or International Depository Services, they send you this little title transfer ticket. That would have been your clue that they're just reselling futures metal to you with higher fees. And what are those higher fees? Let's talk about that. So here's the actual complaint from the CFTC. This complaint alleges from the CFTC from July 16th, 2011 to March 31st, 2017. In just spread charges alone, the wealth that was transferred from the Gold Bug community to this company was over $95 million, 100 times larger than a futures product, which is about one tick, okay? So 100 times or wide, or the spread, is with this particular company just reselling the futures. And the tip-off would have been, well, they're storing their metal at IDS. Now, in saying that, why do these spot dealers use the CME or the Comex vaults? For a couple reasons. They can't take the metal out of the system, okay? So they take delivery, they put it in their allocated segregated storage programs and turn around, resell that to the general public, but they actually can't take delivery out of the system because they would have to have it reassayed to put it back in. So they just leave it there in those vaults, and when they're done with it, they just dump it right back into the futures markets, okay? That is one of the key components why futures were invented, were for the merchants and the hedgers to mitigate risks, okay? And the interesting thing is, a lot of you are hooked on this, conspiracy this, conspiracy that, but the reality is the spot bullion dealer that's pushing this, gold propaganda of how terrible the CME or Comex is, probably has an account with an FCM, trading in the futures markets, hedging with the futures, okay, or their merchant services. So in saying that, 95 million, okay, and this doesn't include their financing charges or their service fees. If you would have done that in the futures markets, it would have been a lot more efficient. How efficient? Well, I put together kind of a hypothetical price comparison. These aren't exact numbers, but gives you the general idea. And you can look at the top there. The spot transaction, I did this at 10%, but saying that if you look at, and these are billion dollar companies, I mean, massive amounts of wealth in the spot industry is being lost. I mean, I went to 2 or 3 of them in Los Angeles and Santa Monica, and their spread charges are 20 to 30%. But for this comparison, I did 10%. Okay, and you can see the spot transaction would be the most costly. And then below that, we have the finance spot, which is where the CFTC just filed this case against this company, against this finance transaction. That would be astronomical, again, costs. And the ETFs, and you know, the interesting thing about the ETFs is that expense ratio, especially on the leveraged ETFs. The expense ratio is astronomical when you compare it to a futures contract. And then you got the spot storage, again, not as efficient. Lots of wealth being lost on that. And this is just the storage fees. This is not taking account a lot of the spread charges that are taking place as well. But you can see all the way to the right-hand side, you see all of those are taxed as collectibles, except for at the very end, the 60-40 split on the futures contract. So again, the most efficient way of trading precious metals, interestingly enough, is on the futures basis. And what I find interesting is so many people will say, oh, you know, futures this, futures that, and then walk down to their little spot dealer and get smacked with a 20% spread. But saying that for you collector guys, this really doesn't matter what I'm going over here, because you're taking home delivery and you're kind of on a collector basis, and that's fine. This is more on the investment level. And another thing too is this bullion deal, the largest one in the country, and I'm surprised this isn't a bigger deal out there in the gold bug community, but the net or liquid net worth of the owner of this company is over $2 billion. That's how much wealth has been lost from you guys. And the way it was done is through the means of precious metals, and that fiat was transferred. So who is won in this situation is the bullion dealer or the spot bullion dealer. And another thing too is these guys aren't registered with the NFA or CFTC. In this era, you definitely want to work with somebody in the capacity that's registered with the NFA or CFTC, because that's designed to protect you guys, or in the spirit of consumer protection. But saying that, I just wanted to go over, exactly what to look for if the spot dealer is using Brinks or IDS or Delaware or JP or Manfra or Scotia as their vault services. There's pretty high likelihood that they're just reselling the futures for their storage accounts. And again, like I said before, the purpose of that is so they can dump it right back into futures when they're done with the metal. So if they've got, say $5 million worth of metal and all their clients sell it back off, they could quickly dump it back into the futures market and go about their day. And that's the name of the game, is risk management. Really is the name of the game with this. And the most liquid, versatile 24/7 market is on the futures side. So I hope you learned something. Again, quite disturbing last week that somebody was kind of challenged me on the whole storage, and so I just want to explain in further detail what to look for. And like, I know there's a couple huge bullion dealers in Canada, for instance. They're using the Comex vaults or depositories. So again, just realize if they're in the spot market and you see those vaults in the contract, you're probably just being resold the futures metal. All right. I hope you learned something new. Have a great day. Take care. Bye.